What are some examples of unregulated investments and what makes them an unregulated investment? Financial expert Mr. Srinivasa Varadhan will explain this to you now.
Whenever we think about these unregulated investments, we will give some examples. What are all the unregulated investments? So, if you take these unregulated investments, there are chit funds companies running by the various companies and individuals. So, these chit funds are becoming these unregulated investments because their procedures are not transparent. There is no government control, or there is no government indication of procedures and rules. So the investment what we are making, the returns what we are generating, and the procedures for the investment and the procedures for the withdrawal, all that will not have a much clear idea. And also there is no clear indication on the year-on-year returns and the tax perspective, all this. So because of these reasons, these chit funds are come under these unregulated investments. The next unregulated investment is going to be the jewelers gold schemes. The schemes run by the jewelers also follows by their own way of rules and regulations. Every jewelers has their own schemes and their own procedures for enrolling as well as investing, all that. There are people investing on a monthly basis in that gold schemes, and there will be no control on what kind of benefits they are going to get. They are supposed to buy only the ornaments where there will be a sizable deductions will be applied. They will give the schemes and the brochures saying that we will offer some discount on these deductions on these ornaments, and also we will partially charge some amount on these deductions. Like that, there are various schemes run by the different jewelers. So these all the safety measures, all it's about the particular jewelers financial soundness and how their business are going on. So without knowing all this background, people are investing in these kind of schemes. There are one or two experience like getting into trap or in these kind of schemes also many people have experienced. So whenever we are going to invest these kind of schemes, our returns also it's not going to be guaranteed, and also whatever the charges they are taking for the buying ornaments, approximately this will be applied at least 8 to 10% of the charges. So they will increase their deductions for the scheme holders and showing that we have been offering some discounts on the deductions when you buy the ornaments through these monthly accumulation schemes. So whenever we buy any ornaments, there will be minimum of 8 to 10% charges will be applicable. Then apart from that, GST also is applicable. Altogether, we are losing nearly 10 to 12% in buying each and every ornaments. So if I pay a lakh of rupees, I will get back only 80,000 to 85,000 worth of gold actually as an asset. So remaining 15,000 rupees I am spending as a charges. To recover this 15,000 rupees, it will take some couple of years to get at least this to recovering this 15,000 rupees. But we never include these charges when calculating these returns. Apart from that, whenever we are going to change these ornaments, we are going to hand over the old ornament and buying the new ornament after couple of years. So at that time of converting this old ornament into new ornament also, there will be some charges and deductions applied for your old ornaments. So again, there will be approximately some 10% charges will be applied. So when you change the new ornaments, again there will be some charges will be applicable. So altogether, if I invest some lakh of rupees and if I generated average of 10% of growth over the period of 3 to 5 years time, out of that 30 plus percentage of returns would have been taken by these jewelers itself. So when we calculate these returns generated by these physical ornaments or the accumulation schemes, when we apply all these charges and parameters, again there is no clear uniform regulations on the charges and accountabilities. And then there is a taxation point is applied for all these jewels investments, all that. Many people may not know the investment in these jewels also need to be accountable in these capital gain taxes. So in order to justify these capital gain taxes, either it's long term or short term, all that, there is no procedures are followed. There is no proof has been maintained for as a proof of buying, as a proof of selling. For example, if somebody is liquidating 10 lakh worth of gold, if they receive the money in form of cash, if they deposit such amount into the banks, this is going to be a big trap for them in the tax perspective. But whatever the amount you would have invested in these ornaments, 100% is hard and accountable tax paid money. But when we redeem it, we could not get it into proper accountable manner, because finding a buyer and who is paying in form of DD or who is paying in form of direct credit to bank, all this is going to be missed, because we have been given sizable allocation, minimum of 20% of allocation towards the physical ornaments in all our portfolios. So we have been maintaining a reasonable savings in that criteria, but these regulations towards this and taxation procedures, all that is going to travel long way. So we have been considering this schemes run by the jewelers also is the unregulated investments. So we should have some clarity to buy the jewels for the usage purpose and using these for our requirement. The investment approach is entirely different and the using approach is entirely different. This clarity we need to bring when we think about investing into these physical ornaments.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free and you can find the link in the below description. Please like and share and do subscribe to Holistic Investment.